Meditators, today you will benefit from a discussion of where we are in the current market, how to de-risk your crypto assets while still earning profits, an explanation of the commodities megacycle and how you can take advantage of it. Sharing his knowledge with us today is Smart Contractor. He is a popular crypto trader who is also known for trading stocks and commodities. Smart Contractor has a lot of interesting takes, not just on the crypto market and the assets he is currently trading, but on commodities as well. This is a topic that is not often spoken about, and it was great to hear about all the potential opportunities the market has to offer. Now, if you want to help this channel become a commodity, remember to like and subscribe below. To stay one with the crypto market, sign up and get 6 free market meditations newsletters a week. You'll find a link in the description below. A quick thanks to our partners Exodus for making this podcast possible. There will be more on them later. Meditators, welcome to another episode of the Market Meditations podcast. Today we have with us another core member of the crypto Twitter community, Smart Contractor, also known as Benjamin Bluntz, also known as Ben. Thank you so much for joining us, Ben.
Hey, thanks for having me.
Well, it's an absolute pleasure. Why don't we start with Smart Contractor, Benjamin Bluntz, and Ben? How do these names come about?
A good question. It was a very impromptu thing. I decided to create a Twitter sort of fairly impromptu in 2017. I guess the reason I started that Twitter was I was following a lot of people back then, and I just remember seeing just a whole lot of garbage posted by a lot of people, and I was actually in crypto and following along in Twitter for a long time before I decided to create my own account and actually start posting. And that was due to the fact I just thought, I could create a lot better content to what a lot of the stuff I was seeing, but the actual name was just sort of very impromptu. It didn't really mean anything at all. I was kind of like a play on words for smart contracts, but then I ended up, sort of putting a spelling mistake in there at the end with the ER instead of the OR, and I just kind of rolled with it because it was too late to change. then I just sort of really got into weed stocks, in the run up a few years ago. So I just sort of changed my name to Bluntz for a bit, and then that kind of stuck as well. And that was pretty much it. Yeah.
Yeah, I mean, and finally, so it's not because you're an absolute crazy stoner, it's because you traded a lot of weed stocks, which I was never sure
No, I
about.
don't smoke. I don't smoke much at all, no.
Which is hilarious given the Anon cartoon. We had Trader Main on, and he isn't actually a robot dinosaur. It's crazy how people start their Twitter accounts with no idea how big it's going to get, and then end up looking back and thinking, I wish I introduced this a little bit differently. Did you have any idea your Twitter would get to where it is now, which is pretty much like a full-fledged business?
No, never in a million years did I think, 3 years ago, would I have 100,000 followers or even more, 120,000, whatever. But yeah, it's a pipe dream back then for sure.
What was your background before getting on into Twitter?
With trading wise, I was always how I got into I guess how I got into Twitter because of crypto, but I got into trading through trading like Forex and gold, believe it or not. But this was like 4 or 5 years ago, and I was trading physical gold. I was buying gold bars and whatnot. And one of my mates actually pulled me aside, and he was like, like, what are you doing? Like, why are you buying physical gold? You can trade these things, and via CFD. So he got me into that, and I started trading. I learned how to trade. So I was trading gold, CFDs, and currencies for about, the last 6 years or whatnot. But it was only in about 2016 that I sort of found out Bitcoin, started trading cryptocurrency, and obviously finding, coming from being a gold trader, finding Bitcoin was like obviously the digital gold. That was kind of the light bulb moment for me, where I realized this is what I want to focus on now. It's more liquid, it's a better product, it's essentially gold, but an internet version. And obviously, me being a millennial, I grasped it psychologically, I guess, really easily, and I kind of never looked back. Really, I kind of put the trading of forex and gold and sort of traditional instruments on the back burner, simply because there's not enough time in my day to be focusing on that. I spend too much time as it is just looking at altcoins and cryptocurrencies and 100 different tickers a day. So yeah, the rest was history, I suppose.
So many traders from traditional markets have come over here because crypto seems to be the easiest poker table to play at, the most inefficient market. How much truth would you say there is to that statement?
100, I think 100%, because I guess my trading style, and specifically as well, is Elliott Wave, and that's based on market psychology. It's based on um, the patterns, being formed by retail traders, and I guess it's hard to explain Elliott Wave in basic terms for people who don't understand, but it's kind of like markets move in specific ways, and after they've done, let's say, 5 waves up, whatever, they do a corrective move down. And I find Elliott Wave works a lot better in an environment where it's made up as predominantly retail traders, and it still works, but less so in markets like gold and currencies, where there's a lot more institutions and a lot more sort of robots and high frequency traders and robots and stuff. I just find that for me personally, it worked a lot better for me in crypto. My success rate became a lot higher once I started trading crypto than what it was, and I was already profitable before then. So
A lot of the audience know, and I don't know if you remember, but I actually started a lot of my trading journey down the Elliott Wave path because it was the first thing that really made sense to me and drew me in. Eventually, I pivoted away because I found simpler trading styles worked a lot better for me. There's often a negative stigma around Elliott Wave because it does tend to be quite complex. Why do you think that negative stigma exists, and why have you been successful with Elliott Wave where so many others haven't?
well, with Elliott Wave, there's actually it can get quite complex, and there's a lot of different rules and different small, minute things that you need to memorize. I think the core principles of the 5 waves up, ABC down, 61.8 retracement, the bare basics is where you get the most success. So I was, once upon a time, 100% stickler, for the rules, where I would call out or get into arguments with people if they were posting something that was incorrect or what I thought was incorrect. I think the bare basic principles of Elliott Wave are good to use. The foundations are good to use. And if you can keep it simple, and have it in the back of your mind where you understand the bare basics, but then also incorporate other trading strategies into that, is where you get the most success. I think the people that try and become experts at it, and put too much emphasis on the details and trying to sort of label every tiny movement. Like if it doesn't just scream at you in your face and you're not sure, you can just say I'm not sure and just move on to something else. I think the diehard Elliott Wavers try and trade that, whereas I don't. If it's not simple for me, I'll revert back to a different kind of trading method, or I'll only trade something that is in your face, blatantly obvious. And I think that's kind of where the success comes from.
That really makes a lot of sense because I feel it's so difficult to accurately predict what's going to happen in the market. I mean, some of the best traders make fortunes off 40% win rates. So trying to figure out the exact minutia to pinpoint exactly where the market's going to move every single time is why Elliott Wave gets its stigma. But you seem to use the core principles of 5 waves up, ABC down, and I'm sure a few other nuances there as well. That 618 retracement to form the foundation of your technical analysis. Now, I often like to say technical analysis is about 10% of the battle. The other 90% is your psychology and risk management. You could potentially throw in some fundamental analysis there as well. How much would you agree with that statement?
Oh, 100%. If you can get your technical analysis lined up with your fundamental analysis, that can give you the conviction to sort of go harder on a trade. I mean, that's what I personally do. If I've got the FA and the TA lined up, let's say I've got a rule where I'll only risk 2% of my max capital on each trade, as the stop loss. If I've got a high conviction trade where I've obviously, got the technicals lining up with the fundamentals, I'll probably risk double that. I guess, I do practice very good risk management. However, that is discretionary at the same time. Sometimes I do risk a lot more than I know I should if I'm confident in something.
What sort of fundamentals do you look for?
That's a good question. I guess it differs for every project. I mean, obviously, let's say, for instance, let's say, for instance, sushi is a recent one. Obviously, sushi came out originally. It was just like a vampire attack of Uniswap. Then it sort of dumped 90%, but then they started branching out and doing different things. They started offering different products to Uniswap, and in conjunction with that, obviously, it had dumped 90%, and it had formed a nice base, and then it moved up in 5 waves and had a nice sort of ABC pullback to the 61.8. Obviously, it's hard to see on the chart now, but if you really, really go back and look, let's say on the daily time frame, back to the 7th of November, you can see where it moved up and pulled back to that 61.8. Now that was at a time where sushi was actually starting to do different things and offering different products, and were really starting to push forward and show their ability. The devs were starting to show their abilities, and that was lining up for me technically with the fundamentals. So that's just one instance, and obviously sushi's been like one of the best performers, of this cycle for DeFi.
So Ben, if I were to try replicate this sort of thing, what sort of signs should I look for in projects in the current market to align those fundamentals with technicals?
I guess it's hard in the current environment because everything is already so pumped. So in the current environment, I probably wouldn't. I probably rely more on fundamentals than I do technicals, just because I prefer to use fundamentals. In a bear market. I think in a bull market, it's harder to use fundamentals on something that's already at all-time highs. That's definitely more of a technicals game for me.
When you say current market, where do you think we are in the current cycle, and what's your reasoning for that?
I think we're probably about 3/4 of the way through. I don't think we've hit a top yet, but I definitely don't think it's early anymore. I know I'll probably get a lot of hate for saying that, but yeah, I'd say we're about 3/4 of the way through, in my opinion.
I mean, we've been pumping since 2020, so it's pretty difficult to say after 1.5 years almost that we're still early, but who knows? This could last a lot longer than the previous one, so there are no absolutes in the market.
And another thing is, we could top, but we could have a quick bear market. We could, pump to 100K and then pull back to 50 or something, and that could happen in the space of 4 months, and then that's it. We don't know. Like just because I say, I think we're 3/4 of the way through, it doesn't mean I think that there's like going to be a 3-year bear market that comes after that. I don't think that is the case.
How are you positioning yourself with the under the hypothesis that we are 3/4 of the way through?
I mean, for me, as price moves up, I give myself quite a nice buffer, but I generally just keep dragging my stop losses, under major lows that you can see on daily.
So is that stop losses based on, when you say under daily, market structure, or simply just daily closes?
Oh, no, market structure on a daily time frame. Yeah, I use support and resistance, like major support and resistance as in my trading strategy for sure. I think for me at the moment, major support is at like 50K, which is on the daily. Yeah.
So say your major invalidation right now for the bull market is around 50K for Bitcoin. So say your stop loss gets hit at 50K, you now have a whole bunch of, I imagine, either stable coins or fiat. What happens next? How do you then position that fiat?
Well, I mean, for me, this is why I love cryptocurrency so much, because we have DeFi. If you are bearish and you just want to get out of the market, you've made your money, you can go into stable coins, and you can still, there's a plethora of ways that you can deploy those stable coins to earn higher yield than you would get in any high interest savings account. So let's say on FTX, for instance, you can lend out your stable coins on FTX for anywhere between 20 to 100% APY, depending on on the demand. I don't think I've ever seen FTX stablecoin lending rates under 15%, you know, and what's a high interest savings account? It's 1%. And that's a centralized exchange. You can go onto DeFi and do the same thing. You can lend it out to you know, to 𝐉𝐸, to Compound. You can do the more degen, I guess, farms, but still with stable coins and earn like 50% APY. Like, there's no reason to ever cash out into fiat. I mean, I can't see myself, even if I think the bull market's over, I can't ever see myself exiting the crypto sphere into fiat, because I can still have fiat in crypto earning better yield than anywhere else. So I think that's going to be revolutionary. I think that's going to change a lot of things. And right in this current environment, I just don't see any reason why anyone would ever need to leave crypto, even if they were no longer bullish.
So people often say risk and reward are correlated. If we're getting these high yields, isn't that some sort of risk associated with it for the average person?
Yes, yes. So there is. So obviously there's going to be risk. You could probably mitigate that risk by spreading out your funds. I've always had a healthy skepticism of exchanges and fear, but for some reason, and I can't pinpoint why, but ever since FTX came along, which is where I predominantly trade on, that kind of got a bit more relaxed. I don't know what it is, but I just feel a lot safer having my money on there.
It's the Sam effect.
Yeah. Like I've always, on Binance and KuCoin and all throughout the 2017 bull run, I was petrified of having my money on exchanges. I was spreading myself out between all of them because of the fear that one was going to get hacked. But I'm this time round, I guess I probably shouldn't feel this way, but I do feel a lot safer on FTX. I don't know. I think it's a really, really good exchange, and I just, touch wood, but I just can't see anything bad happen. I mean, yeah, I don't know.
Yeah, I likewise have a lot of confidence with FTX. They're our primary partners for a reason. We think they're probably one of the best in the space right now, one of the fastest growing exchanges, one of the most recent successful exchanges as well. The market is very competitive, so you need an innovative product to be able to keep up with the rest of the space, and the rate at which they evolve is incredible. They just bought the Miami Stadium. So outside of
Yeah.
FTX, what about actual DeFi? So there's a lot of farms where you can earn those yields and spread your investments across them. Is there anywhere in particular you'd recommend to listeners? Also, are there any particular risks you think they should be aware of?
Yeah, so DeFi, that's a whole other rabbit hole. I mean, you could spend your entire crypto career just sort of researching DeFi, and and coming. Obviously, for me, I got into DeFi. I think it would have been about, it would have been as Wi-Fi was coming up. So that Wi-Fi is what got me into DeFi. I saw the meteoric rise that it had. I think I started trading Wi-Fi at about $5,000 the first time round or something like that. And then I started looking into it. I had a friend, DeFi Ted, from Twitter, who I met on Twitter. He was really, really helpful. He sort of babysat me through my whole getting me into DeFi, and then I went down that rabbit hole. But yeah, it's definitely not. It's not easy, and if you make a mistake, you can lose a lot of money. So it's definitely something you have to really wrap your head around. I think it might come easy to some people, might not for others. But once you wrap your head around it, there's so many opportunities in DeFi, and there's so many cool things you can do at the moment, like lending, collateral to, let's say, so not only can you farm with stable coins, in DeFi, but you can do things like lend your ETH to a lending protocol like Compound or 𝐉𝐸, and then borrow stable coins against that ETH using collateral, and then go and deploy those stable coins that you've borrowed to farm yield. There's just some crazy things you can do on DeFi, and
Would you say you've made more money through DeFi or trading this run? Because I know DeFi returns have been outrageous. And
well, I think they come hand in hand, because the most money I made was in DeFi, but trading DeFi. So obviously, I made a lot of money farming, but the most money I made was, trading the DeFi bull run. I think with Wi-Fi and 𝐉𝐸. 𝐉𝐸 was probably my biggest win. screaming about 𝐉𝐸 from the rooftops, and obviously I definitely had my fair share of risk on 𝐉𝐸 because I was all in on a few points in time, with leverage as well, and that was that was like one of the rare times that I was probably over leveraged, but I was also had high conviction. I'm definitely scaled back now. I'm nowhere near as leveraged as I was, a couple of months ago. But sort of, once it hit like the climax, I kind of took a step back, and now I'm still trading, but nowhere near as optimistically as I was.
One of the biggest problems in the crypto industry right now is that there are far too many applications and none of them are very user friendly for beginners. That's why we've partnered with 𝐏𝐸𝐬𝐧. They're a desktop and mobile wallet that allow users to own their own private keys, navigate a very easy interface where they can view their portfolio, store multiple different cryptocurrencies, as well as exchange and earn interest on those cryptocurrencies. So if you're interested in checking them out, head over to 𝐏𝐸𝐬𝐧.com. That's 𝐿𝐿𝐸𝐬𝐧.com. What primary altcoins are you trading right now?
For now, right now it's the lower cap DeFi stuff. So obviously the things like 𝐉𝐸 and SNX, Sushi, Uni, I just think they've risen too far, too fast. Their market cap's absolutely huge. So I've scaled back on those, and now it's like the mid cap DeFi stuff, which I'm focusing on because I think they have really nice charts, and B, I think they didn't get as much of attention. I think the large mega caps sort of sucked all the liquidity and didn't sort of give them a chance to really run. But I think now they've all pumped, like, things like 𝐉𝐸, Sushi, Uni, they're all between 20 to 50x, from like 12 months ago. So I think, a lot of these mid caps are yet to go. So that's kind of what I'm focusing. I don't actually have any sort of large cap DeFi exposure at the moment.
Oh, very interesting. Much like the crypto cycles where it just goes from large to mid to super small, we're seeing that almost unfold in a mini way in DeFi. I've also noticed a lot of the new up and coming DeFi projects do extremely well. Recently, Vespa absolutely exploded, another great platform. So outside of DeFi and crypto, and you said you've moved almost entirely into crypto, so I'm not sure what your response to this question will be. Do you personally invest and do you segregate your trading and investing?
Yes. So I do invest. I do obviously everything that I participate, in DeFi, through the 𝐸 network. All that is kind of sort of long-term holds. Obviously, I keep some long-term holds on hardware wallets, and then I keep my trading on exchanges. So exchanges is where I leverage trade, and through the 𝐸. I guess most of my investing is through the 𝐸 ecosystem, only because it's so easy and everything's done on 𝐸. You get your MetaMask, you can use Uniswap. I just find, if it's not on 𝐸, it doesn't really have any network effect. Like you can't do anything that you can do on 𝐸 that with Bitcoin. There's no MetaMask for Bitcoin where trading, it just doesn't work. So
There is actually coming out of quite a few wallets. I know a project called XDeFi. They're trying to create a multi-chain wallet that can have ETH, Binance Chain, your Bitcoin wallet, maybe Solana, and any other thing which comes out. So some ambitious projects are trying to bridge that gap. But for now, the most sophisticated one with the most infrastructure is without a doubt Ethereum. That's why it's pumping the hardest. That's why most things are built on there. So outside of crypto, are there any investments right now, or are we all in on crypto?
Oh, I mean, yeah, I'm definitely in a lot of other things. Stocks. I think we're on the cusp of resources Megacycle. So a lot of mining stocks. I mean, I never talk about this on Twitter just because I don't think anyone's really interested, because crypto is kind of what I focus on. But I am investing in a lot of resources stocks. I think. Yeah, I think over the next 50 years, we're going to enter a massive sort of, I guess, resources mega cycle. And I guess Bitcoin could even sort of be classed as a resource. I think they're kind of in the same similarly in different ways. I think there are sort of attributes that you could call Bitcoin a resource as well.
Could you possibly define a resource and also then explain what you mean by resource megacycle?
So I guess we'll probably I guess when I say resource, I think commodities. So I think resources: oil, gold, silver, copper, minerals, iron, like basically everything that is finite.
And could you then just define what you mean by the resource megacycle?
Okay, yeah, sorry. So by Megacycle, I think obviously, resources have been, they've been in like a huge bear market. I think I pulled the chart up. Let's say uranium, for instance, 10-year bear market. Basically, I think, yeah, they've all been getting smashed for decades now. Relative to equities, S&P 500, they've been getting smashed for a lot longer than that. And I do think that is coming to an end. I think we're going to be going back to a time where they will start outperforming equities. I think it's cyclical. I think equities and resources are cyclical. They are also cyclical. It's just another way for me to play the US dollar debasement, but through a different avenue.
So I have very little exposure to what you defined as resources, which technically are also commodities. How would you advise me or anyone listening to this position themselves to take advantage of that from a position of no exposure?
I mean, the easiest way would be ETFs. So obviously, figure out which particular resources you're interested in most, whether it be uranium, sort of iron, gold, oil, and position yourself in ETFs. I think obviously I've got some preferences. I think copper, uranium, oil. Even though I'm not a fan of what oil's doing to the world, I still think it's going to be something that performs really well in the next decade. But yeah, the ETFs are the way to go if you don't have the time or know where to start.
So how would you recommend I position myself for this? Do I just instantly buy 10% of my portfolio in commodities? Do I slowly buy? What would the best strategy be?
Yeah, so I think I think the first step is to figure out sort of how much you want to get in exposure. So let's say you want to get 20% of your portfolio exposure in resources. So then that's you've decided you want to put 20% away. Then you pick out, let's say, 4 ETFs in different sectors. You'd put 25% in each of those ETFs to equal the 20% of your portfolio. But I think it's a very it's going to change from person to person. It's fully dependent on how much you want to sort of allocate towards that. I mean, obviously me, a majority of my net worth is in crypto, hands down. There's no question about it. But I do have other investments. I guess it'd probably be 80% crypto for me, 20% stocks, and it'd be various different stocks in various different sectors.
Oh, so 80% crypto, 20% stocks. Are the commodities in there?
I think, yeah, commodities of that 20% would be about 10%. So yeah.
Okay, that's some pretty heavy commodities exposure. Because personally, I have way more stock exposure right now and haven't considered commodities that much. But I guess if you believe in that mega cycle, because there's been 10 years of bear, that it's going to go quite parabolic, it does make sense.
100%. I mean, I think some of these uranium stocks, I personally think uranium's you're gonna do crypto like gains over the next decade. Like we're talking 10, 20x in some of these stocks. I really believe that's so that's how I've positioned. Obviously, it's not going to happen overnight. I mean, a lot of the uranium stocks right now are about 800% off their lows, but they're still down even from current levels. Most of them, or a lot of the Aussie ones that I'm looking at, they're still down 95% from their all-time highs back in 2007.
I might have to go have a look at commodities after this podcast. Ben, as we draw to the end of this podcast, I know you have a fantastic group which everyone speaks highly of. Could you tell us a little bit about it, please?
Oh yeah, so I started. I obviously have a paid service. I guess it's more of a community, so we kind of we all talk with one another and give each other setups. But basically, I provide setups. You're saying, obviously, I like this. I'm going to take profit here, put a stop loss here. Obviously, uploading educational videos, every day, analysis on on different coins and stuff. And basically, that takes up a lot of my time between Twitter and that's pretty much what I do. Yeah.
Well, that's pretty fantastic. So anyone who's looking to learn little bit more about how to trade crypto, do you have any DeFi and yield farming in that group as well?
Yeah. So obviously, there's a lot of the DeFi stuff we're in all talked about. There's all different channels where we talk about all new projects and new sort of farms that are coming out that not many people are talking about and whatever. But yeah, it's all very helpful. So it's not like you get thrown in the deep end. It's like, here, we're doing this. It's very educational, where everyone sort of helps each other out, because obviously DeFi is
very complex.
Yeah, it's complex. It's not something you can wrap your head around easily,
to say the least. So it sounds like if I want to learn about DeFi, basic Elliott wave trading, looking for setups, your group is the perfect place to go. Also, from this podcast, I need to go check out some commodities stocks as well, have a look at the charts and see if I want to get even a little bit of exposure, say 5% in that sort of market. I'll definitely go follow up on that. Ben, thank you so much for your time. This has been an absolute pleasure. Are there any last words you'd like to leave our listeners with? That could be simply I had a great time, or some basic trading advice that you really think people need to hear.
Yeah, I guess obviously, pick and choose your pick and choose the trades that you want to go hard on. I think that's kind of, I've made some very lucky trades, but I guess, if you've got a high conviction in something, go hard, go harder than you usually would, but always practice proper risk management. So
there definitely is something to be said about conviction. Sometimes taking on that risk of ruin does result in extremities of success. Diversification, while does promise safety and preservation, it's hard to aggressively grow wealth when you take that on. So I think that's really important advice. Contradictory, but something, when properly understood, can be an absolute asset and tool. Ben, really appreciate your time. Meditators, thank you for joining us for another episode of the Market Meditations podcast. I will see you next time. Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at 𝐏𝐸𝐻, and do not forget, we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.